welcome everybody. We are here for Ticker Talk today, of course. We'll just quickly go through our little disclaimer as usual. Everything we do here is for educational purposes only. We are not investment advisors. We don't provide investment advice. All statements made here today are my own personal opinions and not to be considered advice to buy or sell any security. All trading and investment decisions are your own, and you trade at your own risk. All right, I think everybody knows who I am, so we'll just blast through that. And actually, we're not going to look. I guess we will actually start getting into some tickers here right away. But first, I've got some tickers that people in the Discord wanted to look at. People who couldn't be here live. So that I don't forget, I'd like to get through those first. So for brownies, and you might have seen his posts in. He was talking a little bit about this stock or a stock in the dividend channel, and also in tickers you're watching. And so he mentioned Costco, and I've already forgotten the name of it. I know the ticker. The ticker is OV8. It's on the Singapore Stock Exchange. So we're going to look at those for brownies. And then Nash, who I'm sure you guys have seen online as well. He's asked for NEO and Zoom. So we'll pull those charts up and take a look at those. And as always, if anybody has any questions or comments or anything as we move along, feel free to, you can unmute yourself and ask your question. And actually, Golf, I'm going to just, oh, you're muted, okay. Yeah, you can just unmute yourself and ask a question, or you can type your questions into the chat. We had a really good discussions going last week. It was lots of fun. Everybody, lots of back and forth, lots of talking back and forth, which was really cool. So let's get into these tickers then. All right, we don't want to look at Vuzi just yet. So Costco. All right, so we look at this one quite often, and we have looked at this a lot. And you know, it had totally broken down, and it had a bounce, a decent bounce, pulled back. So now it appears that it's put in a higher low, although we can't confirm the higher low until we actually make a higher high, right? But we are definitely on our way to making a higher high. We have, I should actually delete this old gap here. There we go. So we almost filled this gap that was left here, which is good. I mean, people always say that gaps need to be filled. People always look into this comeback and fill the gap. But if this is pretty much filled now, people won't be thinking that. We've moved up through the 21-day moving average and coming up into the next level of resistance, which could be this pivot high right here. That's something we definitely want to watch out for. So that is potential resistance right there, that pivot. But I think the stronger resistance is probably up at the the $500 level, obviously, really big psychological level. But some good moves in the last few days. After putting in this this sort of red candle that tried to break down at the bottom of this, it moved up nicely from there. So it looks like Costco is on its way, certainly on its way up to test this pivot high, and then if not higher than that. There is resistance overhead, of course. There will be people overhead who want to sell, to get out, break even or whatever. And we've got that 50-day moving average overhead, the 200-day moving average, and then the 100-day moving average. So still a lot of work for this to do, but it's definitely on the right track. Now, I'd love to get back in this. I'd love to do some leaps again in this because I closed mine out. But I'm not sure. I'm kind of not feeling it. I guess I sort of missed. It would have been really nice, actually, if I'd noticed this red candle here and then just bought above that candle. That would have been really cool. That would have been a nice little trade that I would definitely still be in, as a swing trade. And I'm totally cool with swing trades turning into position trades and even investments if it's something like Costco, right? Something I do want to own long term. So yeah, I'm looking fairly bullish in Costco. Now, the other one that Brownies was looking at is a company called, and hopefully I pronounce this properly, my accent will be terrible, of course, Shengxiang. The ticker on the Singapore exchange is OV8. Now, if we look at this, we're looking at a daily chart of this right now. Okay. You can see this is up year to date, which is unusual for stocks. But you can see that there's not a lot of price movement in this. You know, I mean, the range on this chart, we go from basically a high of $1.61 down to a low of $1.38 is what we're looking at this on this chart. So this is definitely a slow mover, not a growth stock by any stretch of the imagination. But you know, one of the cool things about these slow movers like this, once they get going, they just tend to keep going in a direction. And you can see this, you know, you can see this when it sort of got into this downtrend, it does tend to stay in that. And now that it's in a little bit of an intermediate term uptrend, it's sort of staying in that uptrend. I liked the way this looked on a weekly and monthly chart. I'll actually go to the monthly first, so that you can see all of the price history of this. And you can see that this has just been in a long-term uptrend from day one. You know, when it IPO'd, it was quite strong when it IPO'd and then pulled back. And ever since then, it's just basically a nice, solid, smooth uptrend. Gets away from the trend line a little bit on occasion and then comes back into the trend line. Now, so I suspect, look at, you know, the way we've pulled away from the trend line, now come back into it. It's riding that trend line beautifully. It's also making a potential cup with handle, or you might want to call this a saucer because it's a fairly shallow cup. So you know, this looks to continue higher, and I suspect that after this cup with handle finishes forming, or when it gets out above this previous high here, that it will really start to move away from this trend line again, like it has many times in the past. I like the look of this, you know, on a monthly or even a weekly chart. You know, we can see this. We can see this cup forming a little clearer here on the weekly, and this cup has been forming now for close to a year. You know, these bases, and a cup and handle is a base. These bases have formed for a long time. When they break out of that base, they tend to be really strong moves. They tend to move quite strongly and for an extended period of time. So there could be some price appreciation in this, and it pays a half decent dividend. I kind of like the stock. I need to do some research and see if I actually want to buy something that's on the Singapore exchange. I've got to check for you know, the currency. See how radical the currency fluctuations are, because that is definitely a concern when you're buying foreign stocks on their own exchange. But for Brownies or anybody else who's in Singapore, you know, this looks like a good one, and this looks like a good place to get in. You know, when we look at this when we zoom in a little bit here on the weekly, it looks like we're about to have a breakout of a consolidation, and you can see that this does like to stair step up, right? Where's my little, I think this one, okay. You can see how this puts in, you know, these like these Darvis boxes, right? Where you get a bit of a consolidation, forms a box, and then it jumps out of the box and it steps up. Jumps out, steps up, right? And now we're forming another box. And, you know, it looks like, if, you know, we compare the length of this to the length of these other ones, it looks like this is going to, within the next week or two, probably jump out of this box. And it will probably, I mean, it's, you know, probably just stair step up like this. That's my thesis on it anyway. So probably not a huge rush to get in, but it does look like there's an opportunity for some sort of instant gratification kind of price appreciation on this one. And yeah, so anybody's interested in this, there's a good discussion in the Tickers You're Watching channel. So go check it out in there. I'm sure Brownies would be happy to answer any questions. Yeah, take a look at it and let us know what you think. All right, so next one, Nash wanted to look at NEO. Back over here. Okay, I don't think we've looked at this one in a while, so let's go to the weekly here, get a little more context. Okay. So, yeah, we had the big, post-COVID run-up, and then the post-run-up pullback. Supported before it got to that, what I would call major support. I should probably draw that in. Okay. Yeah, it came down close to this major support level and then pulled away from it. So that's good. That's healthy. So yeah, the weekly doesn't look too bad. How's the MACD on this look? Yeah, MACD has just recently crossed up, still below the 0 line. So this could really get some momentum going. Lots of room for this to run. Okay, let's go move back to the daily. Okay, we can see that this is kind of put in a double bottom here, poked out below the last one. Don't need all these lines messing things up anymore. And that trend line, the downtrend, that downtrend has definitely been broken. This downtrend has been broken. It's good to see, right? It's breaking through all of these downtrends, and starting on its way up. So that's good. Yeah, this is looking pretty healthy compared to a lot of stocks we look at lately. This is quite healthy. Let's get this gap drawn in here because it may pull back and test this. Looks like we've got a little bit of a consolidation going on now. We could call that a bull flag. It's still pretty small, but and it's sloping upwards. We generally don't like to see the bull flags sloping upwards, but we'll see. It's a nice tight little consolidation there, isn't it? So let's see. Let's get a measurement on that. Where does that take us to if that breaks out from there? Just grab that. Takes us right up to that major resistance level in around $34. That's cool. I like it when a flag measures out into sort of a major zone. It makes for a nice clean target. So that's something to think about. I mean, this does, if this breaks out of this flag, I'd prefer it consolidate for a few more days. Because this is a good place for it to consolidate. It's consolidating nice and tight, but it could break out tomorrow because it is so tight right now. And I would be inclined, and this is not investment advice, but I would kind of be inclined to, if this breaks out, to jump on it. Asian stocks are fairly popular right now. They're making comebacks, the Chinese stocks, and Chinese EVs in particular. There's this one and Li Auto. We should probably take a really quick look at Li. Yeah, see, look how well Li has been doing for over a month now. This is a really nice move from down here like 19. It's doubled. It's doubled in the last month. That's actually quite amazing. So back to NEO. Oh, we should probably take a closer look at this. Let's go back to NEO and then we'll come back to Li here because I want to take a closer look at this one. Why have I not looked at this? So where does NEO up off of its lows? If we go from the low here, oh, it's almost doubled as well. Wow. This is sort of like a sleeper double here. Wow, crazy. I missed this. But I mean, it just goes to show how much these stocks have pulled back. If these things can do a double and we don't even really notice, um, you know, they've pulled back so much. Crazy. All right. Yeah, this is really bullish. Even though it's already moved close to 100% off this low, it just feels to me like it's got a lot more in it. So yeah, I'd try and find a way in, and a good low risk way in is to play the breakout of this little consolidation. You can have a stop just below the low of the entire consolidation. You can have a stop under the previous day's low. Yeah, if this thing breaks out to the upside, I wouldn't be surprised if it can get going. What's the short interest on this? Oh, it's not telling me what the float is. That's odd. Short interest doesn't look that high on this one. I'm going to go over to FinViz and see if it has better information. Short float 5.3. Okay, yeah, 5%. That's not that much. So we've probably seen shorts already getting out of the way. Oh, there's a lot more shorts in Lee Auto. 15% short. When was the last time we got that info though? Yeah, shorts are getting squeezed in here for sure. And this is getting a little parabolic. I wouldn't be surprised if we see a pullback, and that might give us an opportunity to get in. So let's go back to our charts here. So I think we've covered NEO here. Sorry, does somebody have a question?
Okay.
Yeah, I think that pretty much covers NEO. I want to go look at Lee again. Yeah, this is a serious breakout that's going on. All right. Yeah, just let me get some lines in here. Definitely want to get that in. We'll get this all-time high in as well. That may very well come into play soon. There might be a little something right up in here around the 42 area. Maybe. There, or no, here. Okay. This 42-ish area, potential for a little bit of resistance there. And then support on the way back down. Well, there's a bunch of gaps here, so I mean, we could see gap support. The real support is much lower. Gaps all over the place in this chart. I mean, which is fairly common with Chinese stocks, because they're trading in China, right? So North America has to sort of catch up to whatever was going on the Chinese exchanges. But this is a serious gap right here. We definitely want to be we want to keep an eye out for that if it starts to pull back. Yeah, it's interesting here. Okay, so I suspect this 34 area is important. All right. So things are getting a little parabolic here. This is not something we can jump in on. We need to see a pullback, and I think a pullback to 34 and then consolidate. Look for some sort of entry pattern in 34. By that time, the 21-day moving average will have caught up to price. And you can see all these other moving averages turn up. Could also be some support here around 32-ish, 31. Yeah, definitely want to be watching for a pullback. Whether that's to 34 or to 31, and then set something up. But worth keeping an eye on this because again, I think this one looks like it's got more room to run. But not until it's pulled back. This is really steep, and it's probably going to pull back fairly hard when it does pull back. Okay, Next one for Nash is Zoom. And this is one that I pointed out in the last weekend video. It's not really breaking out like I thought it would. You can see in the weekend video, I marked in this, this sort of little triangle that it was making. It didn't break out of that, but this is becoming sort of an upward channel now. You know, the breakout didn't really run out of that, or I guess, you know, we can call this an ascending wedge. If it's an ascending wedge, it's actually kind of bearish, but I don't feel at all bearish on Zoom. I suspect we break out to the upside from this pattern. So again, just, you know, keep an eye on this pattern. It's definitely tightening up in here. We should see some, you know, some volatility expansion. And, you know, hopefully that is to the upside. It's expected that will be to the upside. Not a ton of resistance nearby, and like in the short term, you've got this 200-day moving average overhead, and you're going to have some resistance here, maybe a little bit of resistance in around 140, 150. But I think the real resistance comes in around 175. Up in there. Okay. Yeah, it's looking good. I mean, we just got to be patient and wait. And when this does break out, hopefully you get some help from the market as well. I mean, everything, you know, anything we're going to be playing for a breakout needs help from the market. You know, no matter how good a stock it is. But Zoom definitely seems to be really putting in the work to draw a nice bottom here. All right. Okay, that's it. That is that's all the tickers that everybody sent me. So if you guys have any tickers that you want to throw in the chat, or you want to unmute yourself and let me know which ticker is, just, you know, let me know what why you like it. Are you looking to enter, exit, add to it? Let me know if there's anything you see on there that might be interesting. Hey, so nice to see you could make it. Okay, so has asked for trade desk. Oh, that's all right. We went over some interesting stocks though, so I want to go back and watch the recording. If you're into Costco, I can't remember the name of the Singapore grocery store that Brownies was liking. Neo and Zoom we covered. Okay. So yeah, we'll take a look at TTD for you, and looking to add to that. Let's see if we can find a place to add. I think we talked. Did we talk about this last week or the week before? I know it's one that we look at fairly often. Okay, so yeah, we have looked at this recently. So, oh, I remember. Yeah, I liked this, and it's too bad that it broke out to the downside of that. What a shame. Yeah, I liked the way it sort of put in this flag. I didn't like the way it broke out to the downside of that. Then I put in another one, and it's like, okay, the next one's got to break out to the upside, right? And it didn't. And you can see that we drew in a target and everything. But it's still well within this. You can see we've got this really long-term uptrend line. I think this goes way back, that one. Yeah, way back to 2016. Okay, this uptrend line that's still supporting it. Okay, so if you take that uptrend line, oops, bring me back into here. If we look at that uptrend line, and then we've got this sort of more recent downtrend line. You know, those are the two that are doing these two trends that are doing battle. The long-term trend is up. You know, we've got this sort of long-ish intermediate term, really consolidation sideways, right? And now we've got a shorter term, or you know, or even intermediate term, short intermediate term downtrend. And there's something else going on here that I want to show you, because it is something that we should probably or perhaps concern ourselves with. You've probably heard people talking about, you know, stage 1, 2, 3, and 4 in a market, where Stage one is your accumulation. And you could say that this right in here is your stage one, where smart money is buying. And then you get a break out of that accumulation and you get an uptrend, a nice long uptrend, and we call that the price appreciation phase or phase two. Okay. And then we top out and go sideways for a while. And that would be your phase three. And they call that distribution, because now what's happening is the smart money is selling up in here in this distribution phase. And then you get what's called phase four. And that is the downtrend, where this pulls back and eventually we'll find a bottom and go back into stage one. So this is almost a textbook example of that. So is this a stage four decline? And if it is a stage four decline, it will probably decline more. I kind of wouldn't be surprised to see this come down to 20. However, if the bottom of the market is in, then the bottom of this is probably in too. But if there's more downside in the market, I could definitely see this moving down. At least that's what I'm kind of seeing on the weekly chart. And, if we look at the MACD on the weekly, we can see that, this is still declining. This hasn't crossed back up yet. So, on a weekly chart, this is looking pretty weak. So we definitely want to be cautious in here. Now, it does look better on a daily. It looks more like it's putting in a bottom, trying to put in a bottom. But this failure now twice to break out the upside of these consolidations scares me a little bit. One positive is that this base here is, higher than these last two lows, these last two little consolidations or these last two lows. So that is a positive, and this uptrend is still holding for now. But this really needs to break out to the upside of this. If this doesn't break out soon, I think that this is in real trouble. So if you're looking to add, you could add on a breakout of this space. But I kind of think that we've now set up a fairly strong resistance right here at 55. You almost want to see it get through there before you add. Get through and hold really before you add. But that's pretty far from where we are now. That's $7 from where we are now, right? Percentage-wise, that's pretty big. So, yeah, depends. How much do you like this company? How aggressive do you want to be? Maybe you buy on a break above the 21-day moving average. You buy a break out of this consolidation. Maybe watch this consolidation closely. See if you get a nice little setup inside that consolidation. Maybe when it breaks and holds above the 21-day moving average or above 50. Or potentially above 55. 55 is really kind of the confirmation that, it's full speed ahead on this. 55, or 56, somewhere in that area there. So, yeah, this is risky, this one, but, it could work out really well once it starts to get going. Okay.
Thank you.
So is that TTD? Does it make sense? So
Yes.
good.
Yes, Kevin. Thank you.
You're welcome. All right. Does anybody else have any tickers they want to look at? Oh, cool. Justin. All right.
The camera. Hey, Kevin.
Oh, I cannot open this chart.
Oh.
Why? Can't open this chart layout for you. If you're owner of this chart layout, if you wish somebody else to see the chart layout, then please ask the owner to enable the chart layout sharing.
Ooh, got it.
Or to publish it by clicking the publish idea. Yeah, just the sharing is probably the easiest way to deal with that.
Okay. So how do I share a chart with you, Kevin? With TradeView?
You would. Oh, where is it?
And if you want to go through another ticker while I figure this out.
Um,
I could also just screenshot it.
yeah, you could do that too. Where's the sharing? Sharing right here. So if you go to, I think this is, oh wait. See, I'm using the desktop version of this, of TradingView, and it's slightly different. But if you've got like a little menu of settings like this, and you should see sharing right in there.
Okay. Oh, I see. Sharing is on.
Well, was it on already?
Or it's on now.
It's on now. Okay.
Yeah, it was off a second ago.
Trying to reload that chart. Sweet. I got it.
Okay, cool.
Okay. Let's get rid of that. Cool.
So basically, Kevin, I'm just trying to get used to like drawing trend lines and identifying like, resistance levels and things like that. Still kind of a beginner, so just wanted to see what your thoughts were. This is WWE, yes, though, the World Wrestling Entertainment Inc.
Okay.
I thought I had I work in entertainment a little bit, so
Okay.
I know that people in this business, like even during the pandemic, business was pretty much booming. And it's just one of those companies I follow. I have a lot of little cousins and nephews that follow the WWE. So
Right.
yeah.
Cool. Okay. Yeah, I mean, I see some pretty decent levels on here, and it's cool the way you're drawing in the accelerated trend lines. When it starts to move away from a trend line, then you're drawing in a steeper trend line, and that's great, right? And you're leaving these old ones on. I mean, a lot of the time I'll pull those old trend lines off when they don't kind of matter anymore. But I think that when you're newer, it's good to leave them on, because maybe it starts to return down to this trend line, and you go, aha, that trend line is still intact, right? So that's cool. And so as far as support and resistance goes, some of these levels, okay, I can see where you got that from. This one, I think, where is it? That's like 61-ish.
Yeah.
62. Not sure how relevant that is. It's had a little bit of interaction with that level. I mean, there's a pivot there for sure, right here for sure, right? But it seems to have been able to violate that level quite easily a number of times. So that's one of the reasons I like, when I do my support and resistance, I'll draw like a thick line or a thin line. And if it's a thick line, I consider it a really important level, right? A level that's had a lot of interaction with price. And so, that might be like this top line, I might put in a thick. And then this line right here, this one at 55, we've had a lot of interaction there. It's supported here and here really cleanly, right? We tried to support here, and then broke through. We've had support here. So this line here, this 55 is a really important support level. All right, so let's zoom in a little here and see what we've got going on. So yeah, I mean, you've correctly identified sort of this intermediate term uptrend, and it tried to break out to new highs. I'm not sure if those were all-time highs or not. Okay, wow. Wow, this is way up there in 2018, eh?
Yeah.
2018, 2019. Nice double top before it completely fell apart. What a disaster! 96 down to 30, and then it's been making a fairly strong move back since then. Interesting. But there's going to be, problem when they do this is you get a lot of overhead. There'll be people in here, from here who bought on the way up here because this was, such a strong stock, right? And they'll be trapped in there. And so as price comes back up into this area, those people will be selling. It's like, oh, good, I finally broke even, and they'll be selling. So it makes it difficult for it to move quickly again through there, which is actually healthier. It's not terribly healthy when a stock moves this fast, like it did back in 2018. When it went from, what are we at, $35 up to, above 90 in what, a month or a few months still.
Yeah.
I mean, that's steep. That's steep. So this is a much better pace for this to be moving up. So I guess the question you need to ask yourself now is, do these support levels hold? Does this accelerated trend line hold? And does it bounce from there? If it doesn't hold, where does it come down to? I mean, we've already established that this 55 level is really important. And by the time it gets down there, this trend line will be, right in around here as well, acting, potentially acting as support, right? If you were to extend this trend line, assuming it pulls back. But didn't really have the best day today, did it? Was there news today?
No, I don't actually. I didn't have time to check if there was any news or anything. But I saw back in May. Would that have been considered like a bull flag right there? Kind of like at the beginning of June, end of May. You see how that it kind of ran up like that?
Yes, that is definitely a bull flag.
Okay.
A little bit volatile, a little spiky. Wicky, right? You can see the wick up there, and then there's a wick down here on that bull flag. But yeah, for sure, that's definitely something that that I would have been, if I'd been watching this, that I would have been drawing in there.
Yeah, I actually had something drawn, but I got a little self-conscious. I erased it before I shared it. Yeah, I mean, I just assumed that since it broke so hard to the downside, that's kind of why it fell.
Why isn't this? I like the desktop version of TradingView so much better. Okay, well, I can't move my line now.
Sorry.
Can't even delete it.
I actually typically use Thinkorswim.
Oh, okay. Yeah,
Yeah.
It's a nice platform.
I just figured, I don't know, use TradingView, so I thought maybe this would be easier to share with you. Yeah.
Oh, maybe that. There we go. Okay. Yeah, it probably is. I mean, you can always, a screenshot works too.
Okay.
If you just send me a screenshot or whatever, then this is weird. I don't understand why it's getting trapped here. Anyway.
Yeah.
You definitely identified the bull flag correctly, but it failed out of that bull flag, and he even tried to come back, right? It tried to come back into it, and it failed again. So that's pretty unhealthy. So you really want to see it come into support here.
Yeah.
The good thing is the Keltner channels on this. I assume this is Keltner's and not Bollinger, right?
No, they're Keltners.
Yeah. Okay.
Yeah.
The Keltners on this have been containing price action fairly well. You can see, it came down here as soon as it, pierced out below the Keltner over here, it bounced right back up again. And it looks like that's what's going on now again. So, yeah, there's good reason to believe there's lots of support in here. And if you can see a little pattern, if you could see maybe a little sideways movement in here, or even just like, it starts to go, right? I'd say once it's above that green candle, like 2 days ago, then you're pretty much set in this. It's probably on its way back up to go test these highs again. Is that kind of what you've been seeing in that?
Yeah, no, definitely. Yeah. I don't actually have any money in this. It's just kind of one of those companies that interested me. And I'm just trying to get in the habit of just like following companies regardless if I have like money in them. And again, yeah, no, thank you. And
If I
I
mean,
did notice that, because you've said many times before that, like, if it fell really crazy just from like from its high, that there's gonna be a lot of people wanting to break even or wanting to get out. But it just seemed like it's just on a pretty decent like midterm uptrend,
yes,
and that's kind of like why I've consistently been watching it.
it's a good pace, this move up, and it's doing it when the rest of the market kind of sucks.
Yeah,
I mean, you don't see a lot of stocks that are in an uptrend on this time frame, right?
yeah,
Over this last 6 month time period, right? I mean,
yeah.
it's been volatile. It's up and down a bit, but on the whole, it's moving up. So yeah, this is interesting. You said you're in entertainment. Have you looked at Live Nation at all?
No, I have not looked at Live Nation. So I'm a storyboard artist. So like I'm a little more like pre-production. I'll do drawings for like commercials and for like things like the WWE like promotional stuff.
Gotcha.
Yeah, so that's kind of where I am.
Okay.
Yeah, and I have a couple friends that work in with the WWE, and they say that business is booming. So I'm just kind of like um, that's kind of what piqued my interest. I have a friend who actually is a producer, not for WWE, but like a one of the B-level wrestling companies, I guess. And
Right. Yeah.
yeah, I see that they're doing really well. So that's just one of those things.
Well, I mean that's you've got a bit of an inside track, right?
Yeah,
I'm not saying you've got inside information or anything like that. I mean, because anybody can, go to one of these shows and see, hey, it's sold out, it's packed, right?
right.
But when you've got, friends who are, producers or whatever, and they're saying, yeah, lots of people are coming to the shows, we're having no problem selling tickets. That stuff is good to know, and it's knowledge that you should use that you can allow to bias you to give you a bullish bias, right?
Yeah,
It's a good way to develop a bias. And for me, I mean, that's sort of why I brought up Live Nation, because, I used to be involved in that business. I've tons of friends who are musicians and mostly sound guys actually, but I know that Live Nation is doing well and people are going to shows.
nice. Yeah. Okay.
Why don't I just see as I'm talking about it, why don't I bring that up?
Yeah.
I haven't looked at it for a bit. I was in it. I exited. I exited actually near the top, which was cool. I think it was up in here. I got out because it just seemed like when it couldn't get through that third time, I'm like, oh, this is not going to be good.
Right. Right.
So I bailed on it. But I mean, this is definitely a company that I can see myself going back into, and I just like it. And I know a little bit about the company, because I've got a friend who works there as a production manager, and so and I have done business when I still had my business. I did business with Live Nation.
Yeah.
So I know what they're like as a company, and for a company in that business, in the concert production business, they're like really above board because
Yeah.
there's
Yeah.
a lot of shady characters in that business. A lot of sketchy stuff goes on, but not a Live Nation. Live Nation is real. So yeah, this is one that I'm going to be looking for a place to get back in. And we can see that there's a decent support level on this that it's coming into, pretty much right now. So we've got this level down here, but the one that's sort of more interesting to me in the nearer term is that one. Oops, it's just up a little higher. I want to come off that pivot right there. There we go. So what is that? That's the 78 level. You know, you can see we're getting close to it. I would be watching for this to be bottoming in this area. If it breaks down below here, though, I think it gets a little scary. But I don't think it's going to break. You know, if it breaks, the whole market's breaking, basically.
Yeah, I don't. You know, I've actually gone to a lot of concerts through Live Nation for sure, too, and yeah, I mean, definitely too with WWD. I definitely want to find a good entry level, but I just feel like, you know, like it has. I feel like it's been doing the opposite of like. Do you think there's any relation to that and like the way the rest of the economy is doing?
I think
because it is one of those, like you said, it is one of those weird companies that is kind of like on an uptrend, you know.
Yeah.
Around this time now.
You know, I mean, long term, you know, this isn't a beautiful long term uptrend, right?
Right.
I listened. I don't know. Must have been about a month ago, maybe a month or 6 weeks ago. I listened to a podcast with the CEO, and really liked, you know, really liked what I heard. Really liked what he was saying. I think that, you know, people are maybe worried about a little bit of a recession here, and obviously the market has pulled back. It's pulling back with the market. I think the concerts are to some degree a little recession proof. If your favorite band is coming to town, and you know they haven't been to town in a few years, I think even if times are tough, and you're trying to save money, you're gonna go and splurge. You're gonna save money on something else and go buy that concert ticket.
I mean, you're right. I've always agreed. It's like, it's kind of one of those things where it's like the power of FOMO.
Yeah.
You know, like is like huge with those with that kind of business. And I don't know, and I'm definitely guilty of that too. I've YOLO'd a lot of paychecks on some concerts, you know,
right,
throughout my life. But cool, yeah, that's a good point.
Yeah. So yeah, this is one we should take a look at. I need to update my sort of look at the fundamentals on this. I had before I bought those options, but I need to do that again before I'm really sold on this. But I'm definitely seeing some stuff in the chart here that is encouraging for this potentially putting in the bottom. But I think we've got lots of time to get into this. I don't think there's any rush here to get in right now. I don't really see this taking off in a hurry. Yeah, we got time on this to do some research. And so if anybody else does any research on this, go ahead, drop it into the Discord. It'd be really cool. And if I come up with anything new on this, I will definitely drop it in the Discord as well.
Sweet. Thanks, Kevin. Yeah, I don't want to take too much time from other people's tickers, but yeah, appreciate it, man.
Okay, yeah, we kind of went off topic a little bit. So what do we look at? WWE and all right, and we're going to look at for Ken. We'll look at AMD. Ken's looking to open a position. Okay, wow. All right. So we broke through that 85 area. Yeah, and I can see why it's supporting here. We can see we had this really nice tight consolidation back in here. When was that? May of last year. And,
yeah, May of 2021.
Cool. All right. Let's get that drawn in. Okay. So big question now is, does this support here? It is kind of consolidating a bit. It's a little wider than I'd like to see. About with $6 wide on that consolidation. So that's pretty wide. You could add, if it breaks out the top of this consolidation, with a stop below. That's pretty wide, right? It'd be better to see this either consolidate more or consolidate tighter. You know, the tight little consolidate. Whoops, I want that up there. You know, something, a little consolidation up in there in the top part of that, right under resistance. That would set up a nice breakout trade. And you know, that's how I like to sort of enter these trades is on a breakout, because then, you know, you enter with some momentum, and you can start showing a profit right away. And we need momentum here because we've got a lot of resistance overhead. You know, we've got the 21-day and the 50-day moving average, you know, declining right now, declining fairly steeply too. You know, it's going to have to get through those. It's got this level up 99 to 100 that it's going to have to get through. We've got this downtrend line. So this, you know, this downtrend is still very much intact, right? We're not seeing any signs here of a change in trend. You know, we're seeing a nice clean downward channel, really. Let's move that to there, something like, you know, there's still room for this to break down and come down lower, and yeah, that would not surprise me at all if it did that. I would be surprised if it broke below the 74 level, though. I think that's, you know, and I kind of wonder if it maybe needs to go down here and test this 74. It's just too important a level for it to be this close to testing it and leave it untested. So yeah, I'd be watching for more downside in the short term. I'd be watching for more downside here. But you know, there is potential for this to just turn now. As always, when we look at these semiconductor companies, I do like to look at the semiconductor ETF at the same time. And yeah, I mean, wow, it's almost a mirror image of AMD, isn't it? But yeah, okay. So this came down to its important support level and bounced off of it.
That's interesting, right? Yeah.
So yeah, but semis are still weak. Very choppy, messy in here. So I think all these things just got to move sideways, I think, for a while before they move up. I don't. This doesn't look quite ready to me.
Okay.
Yeah, I think that's all I got for you, Ken, on that one.
No, thanks, Kevin.
Yeah, you're welcome. All right. So that was AMD. Anybody else have anything they want to look at? What are we doing on time? We're about an hour into this. Yeah. Cool. Oh, NVIDIA for so. Yeah, I think well, the last time I looked, I think that NVIDIA, if I remember correctly, was looking healthier than AMD. No, maybe not. Yeah, same sort of idea. Actually, you know, when I'm saying looking healthier, it was probably because the last time I looked at this was probably when I drew this consolidation here.
Yeah.
And then it broke out the downside of that. But now it's consolidating again. Let's just move that line down to there. But yeah, like AMD, it's just messy, choppy, like big moves, chopping around. Can't seem to decide what it wants to do. And you know, so I mean, that makes it hard to trade, hard to add to. You know, if it's just chopping around, you get these gaps, these big wicks. You get in that, and you feel like you're being chopped up. So that's kind of why I say no. It needs time. It needs time to calm down, go sideways, and then set something up for us. Set up something like this. But you know, if you're a long player, ideally that would have broken out to the upside, not the downside. If you're playing short, I mean, then you can see that the shorts just jumped on this. And I kind of wonder why. It's like it looks like it's like after the dividend was only 4 cents. I can't see the dividend having anything to do with it. Anyway, Yeah, it's messy. Like
Got it.
NVIDIA's messy,
Yeah.
AMD messy. I think if we look at Micron, we're going to see that it's messy.
Micron is horrible too.
And but holding important support levels. We can see this on Micron as well. Really important support level here, and it's holding so far. But with all these semiconductors down at important support levels, I think if one breaks, they probably
Will
all
come down.
break. And so that's not good. And how far down do they come, right? So yeah, things are a little sketchy looking still in semiconductor land. I'm not ready to go in there just yet myself. So yeah, be cautious, be careful.
Thank you.
Give these things some time. Look for better setups.
Thank you. Thank you.
Okay, cool. So Casey Dots has asked for. Oh, what did we just look at? We looked at. And we're going to look at. Well, after looking at Neo, I would like to look at Lucid. Okay, yeah. LCID. So Casey Dots says, after looking at Neo, I'd like to look at LCID. That's Lucid. I'm underwater and kind of stopped watching. Wondering what your thoughts are. So there's I noticed a couple of weeks ago, there's a Lucid store front or whatever. It's got like one car in it. Just a few blocks from me here. I haven't gone in yet. I should actually go in and check it out because it looks kind of cool. So that's some little personal anecdote there. They're trying to sell their cars in Vancouver. And they've got a location there. I mean, they've got a really good location. The location's in the right spot. To get lots of foot traffic walking by and looking in. All right. So we IPO'd or we de-SPAC'd, right, on this. Went up quickly. I mean, when you're looking at former SPACs, if you find one that's still above $10, you've got something there, right? There aren't many that are above that $10 level, and this one seems to be holding in there fairly well. So let's get these levels back here don't really matter. I guess we'll just draw these in as pivots. Just trying to find some levels that look relevant, from back in the past and now. Okay, there's one there. That here. Here-ish. All right, you're welcome. So enjoy your other meeting and enjoy the rest of your night. I'll see you next time. Okay. Pivots. Where's my pivot? There. All right. Now, so clearly, we're in an intermediate term downtrend. So we should probably get that trend line drawn in because we're going to break that trend line soon. So we could draw a trend line there. I don't like that. I kind of want to be here-ish. Something like that. I think actually off of that right there. That's not where I wanted that. It's that high. Yeah, that was good. I think that some people will draw the trend line like this because it worked really well right here. It's also working well with the 50-day moving average. And you can see that now we've broken out above that today and above the 50-day moving average. And we broke the 21-day moving average a few days ago. We'll zoom in a little bit here so you can see that better. You can see that the 21 had flattened out and kind of interestingly provided resistance and then support. And now we've moved back above that 21-day moving average. The 50-day moving average has worked really well as resistance. That's that green line. It's worked really well as resistance. And we broke through that today. So you can see that there have been times where we've broken through these moving averages for a day or two, or just had a little spike through here and there, and and they've continued to work. So we want to see this. We want to see this momentum continue. This action looks good, right? I mean, we had this low, we came up, we went sideways for a bit, couldn't really get going, pulled back a little bit, and have put in basically a higher low. And are now moving up away from that. We had a couple of up days with this gap, had a little inside day, consolidated there nicely, and then we broke out above that today. Like if you were thinking about getting into this, when you see this kind of action, and you see this little inside, you see this couple of nice up days after a big red candle like that. Two big up days, an inside day, and right under a 50-day moving average. If you put your buy right above the high of that inside day, which is also above the high of the moving average and this trend line, a buy order right in there is pretty safe. It gives you a really nicely risk-defined place to get in, because you put your buy order there, and what is that, 1897, and then you put your stop just below the low of that inside day, 1750. It's not too bad, in this stock that is fairly volatile. The ATR on this is, almost $2, right? So when you can get, your stop less than one ATR away from your entry, that's great. So what's next on this? I say more upside. Now, all of these, we talked about the Chinese. The Chinese EVs doing well, and EVs in general have been doing well. And if you look at something like TAN and the EVs have a fairly tight correlation. And we can see the TAN has been doing fairly well. TAN had a really nice rally here, a bit of a pullback, and it's back on its way up again now the last week or so. TAN, by the way, is the solar ETF. So stocks like that, Blink Charging is another one that's fairly well correlated to the space, and we can see that this is definitely putting in nice looking bottoming pattern here, and about to break out of that. We might have just found something that is quite playable, although this has already run a fair bit. We're kind of a day or two late on this one. We're a day late anyway. This is another one we should have probably been getting in today. So anyway, back to Lucid. So the short part of this story is I'm liking the way this looks. I'm thinking that this has a fair bit of upside. Now, it's going to run into some resistance here and there along the way. And, the next resistance level it runs into might be just overhead here at about 2050. Kind of coming off of that pivot right there, right? Oops. Let's change that to a real resistance. Okay. Yeah, there may be a little bit of resistance right there at 2050, or it may just blast right through that. This 24 area you want to watch for, obviously, and also up in the sort of 29 to 30 area. But yeah, I think this could move fairly quickly up into around this 24 area, and then maybe find some resistance there. But I don't want to give you investment advice or anything like that. But if you like this company, I see no reason not to hold this. This is definitely showing signs it's put in a bottom. That the panic selling is done. And this will start rebuilding. This will start to recover. You just got to give it time, right? So, yeah, that's what was that? That was Lucid. Cool. Anybody got anything else we want to look at? Looked at some interesting stocks today. There's definitely better things to look at than there was a few weeks ago. A few weeks ago, we just looked at things that just looked like they were just going to go down more, and now we're seeing some stocks that are definitely working on bottoms, trying to set up bottoms, putting in consolidations near lows, and looking like they're going to try working their way higher. So we should all definitely be keeping our eyes open, but we also still need to be careful at the same time, because there still could be another flush down. Ken's asking, do you personally feel like this is a bull trap again? We have had a decent week so far. That's a really good question, Ken. Is it a bull trap? I mean, the easy answer to that is just to say, yeah, right? The thing is, I don't like the way the indices look right now. This looks like semiconductors. Remember I was saying semiconductors are messy. There's nothing going on. There's nothing there to trade. There's no setup there. It's the same thing in SPY. I mean, this is kind of messy. It's not awful, right? It's found support. It's kind of consolidating, but it's a big, wide, messy consolidation. And it just, when I look at this, I just want to go, you know what? Just go sideways for a little bit. Tighten up. The ranges are too loose. We want to see tighter ranges in here so that we can break out of it. Yeah, it's still not looking healthy to me. Not looking entirely healthy. But I am seeing a lot of stocks, individual stocks, that are looking healthy, that are putting in nice patterns, that are starting to look strong. But the indices themselves are still looking a little sketchy. So yeah, it could very well be a bull trap. It's a really tough call right now. I think on these cues, we need to move this trend line over to here. So we're still clearly in downtrends here. And yeah, I just don't know what to make of this price action. It's just too messy. What about IWM? Yeah, I think of all the indices, I think IWM I kind of like the best. This has kind of got a tighter consolidation. This isn't quite as messy as the other indices, and it's giving us something here. It's consolidating a little bit under resistance, and it's looking like it's ready to break out to the upside. One thing we should note though with IWM is tomorrow is the reconstitution day. Actually, in all of the Russell indices. So where they're moving stocks around between indices. So some stocks will move out of small caps and into their large cap. The Russell 1000, the large cap index. Some stocks will fall out of that larger cap index. So lots of movement going on. There'll be new stocks in the Russell 3000. There are stocks moving from the growth. Actually, I saw a thing today that showed that Meta is moving out of the Russell growth, and into the Russell value, which I have to chuckle at that. So yeah, we got to watch out when we're looking at any of these Russell indices right now. They're going to be a little weird, and especially tomorrow and early next week when the sort of reconstitution is done and this rebalancing is done. So yeah, unfortunately, Ken, I don't have an answer that I'm really confident giving you. Is this a bull trap again? Because I think there's a good chance there is a bull. It is a bull trap. But I'm seeing signs, like I said, more so in individual stocks, that a bottom is in. Just not so much in the indices. All right. Anything else, or should we call it a day here? Happy to do more if anybody's got any last minute ones. Otherwise, we'll just look at the calendar going forward. So, okay, yeah, we'll look at we should look at Rite Aid, because were you Justin? Were you looking at that trade that I posted in the options channel?
Yeah, I was looking at it. I was watching it.
All right, so let's. Well, why don't we do a little update on that trade? So Rite Aid had a really nice Really nice move today, except that, and I feel bad for Marvin, because he got stopped out. He didn't take the trade sort of the way I showed it. He bought some calls. He bought $8 calls, and let's actually pull up the intraday chart here, so we can look at what this did today. Why isn't this working? There we go. All right. So this is, I'll change this one here to a 5-minute chart. We'll look at a 5-minute chart right in the middle here. So you can see that when Rite Aid opened this morning, it went up and it instantly turned around and it started dropping really fast. And, unfortunately, Marvin wisely stopped out, because he's losing value in his calls that he'd bought. Losing value really quickly because you had the IV crush and this crush in price moving down here. It looked like it was really just going to fail completely, but it turned around, which was kind of surprising to me, and started climbing really nicely the rest of the day. And now it's up and around $8. I mean, this was up, what are we at? 20% today. This was up on its earnings. So it did squeeze as expected. And now with that strategy we were looking at, let me see if I can grab that and show you guys sort of what we were looking for in that. Cool, that worked. All right, so obviously we're looking for the stock price to go up. If we were to expire right here at $8, well, that would be worst case scenario for that options play that we were looking at. But we need to look at the dotted line, because the dotted line is showing us kind of where we are in that options play, today, right? So that is this dotted line is our return on those options today. And you can see that we're just starting to now turn nicely positive in that and starting to get into the area where we really start, our profits really start to climb. Now, if the squeeze continues, obviously we start seeing that option play make more and more money. One of the things that we can do with that, let's see. Okay, yeah, I want to bring this one up now. So this is where I took the screenshot very near the close. And you see the red one here is that $6 call that we're short, and then the blue one is these are the $8 calls that were long. And I think this was a 1x3. So we had we're short one $6 call and long 3 of the $8 calls. So one of the things you can do here is, and I wouldn't suggest this because I think that the squeeze is on in Rite Aid, and I think it's going to go farther. But at some point, we can pull off one of our $8 calls and lock in some profit. So we can sell that now for 80 cents, right? And still have 2 of these $8 calls left. Now, what we want to make sure we don't do is we don't want to sell all of the calls and leave this short call open, because then it would be naked, right? If we sell all 3 of our calls, that short call would be naked, and we never ever want to be short naked calls. It could be disastrous, and it could wipe out your portfolio in a day if you allowed that to happen. But the cool thing about these ratio spreads is it gives you some flexibility with your exit. You can choose to lock in a little bit of profit. You could lock in profit now by selling one of these, or you can hang on to these and wait until you've got a little bit more, because this will get exponentially better if Rite Aid continues higher. Now you can see that we're coming into a little bit of resistance, kind of up in this area. Oops. Yeah, so somewhere up and around here, it's gonna start finding a bit of resistance. But I think the real resistance sort of gets a little, gets a little more real in around 10. So that is where. So if I were, unfortunately, I'm not in that position. I couldn't get filled. But if I were in it, I'd be hanging on. But I would definitely be selling at least one of those calls when this got to 10. At the first sign, intraday that momentum is slowing as this comes into 10, I would sell one of those calls, but still try to hang on to the others. And then, kind of see what happens from there. But that's what I'll be watching for. I'll be watching for this to come into the 10 area, and then watching to see what happens, just above 11 here should be some more resistance. But for the moment, it looks like the squeeze is on. Good volume, good move, on good earnings. So that's sort of playing out how we figured it would. Another one, I don't know if you saw the CCL play that I posted. CCL has Carnival Cruise Lines. They have earnings in the morning. They've got pretty decent short interest. And so this is the play. I did get into this one. I got a $12 credit for these. So this one I am, what was I doing with this? What am I? Sure, let's see. I'm short the $9. Hang on here. Yeah, okay. Yeah, I'm short short the $9 call and long the 1050 calls on that. For their earnings tomorrow. And you can see that with the little bit of credit that I've managed to receive out of this, I've received, or I have a profit probability of 60%. So chances are I make a tiny bit of money in this, right? Now my max loss, and this is for two. What I'm showing you here is I've got two of these, two sets of this. Okay, so my max loss is $278. That's if I hold all the way to expiration, and this closes at 1050. That would be absolute worst case scenario, and I'm not going to let that happen because I'll either just get out of it before that happens, or I'll make an adjustment. Like I will sell maybe one of the calls, or maybe I will, I'll buy back the short call and just move it out or something like that. That's one of the cool things about these ratio spreads, that they do give you flexibility. So yeah, I'll be watching this CCL tomorrow, and hoping that we can get a little bit of a short squeeze going on that one as well. Okay, but yeah, any questions on that, Justin? Does that all make sense to you?
Yeah. No, thank you. Appreciate it. I wasn't following that one, CCL. I was just following Rite Aid, but I'll definitely take a look now.
Yeah, and you can see, I mean, I'm gonna do actually in 2 weeks from now. 2 weeks? No, 2 weeks I'm doing a ticker talk. So I guess it'll actually probably be 3 weeks from today. I'm going to do another options session where I'm going to go in depth into this particular strategy, because 3 weeks from now we'll be into earnings season again, and I think it's a good one, especially if the market starts to get a little bit more bullish. We will start seeing lots of short squeezes, and this is kind of a perfect way of play to sort of YOLO into the short squeezes, because it gives us the opportunity to make a little bit of money if we're wrong. Which is really nice, rather than just going and buying some calls and hoping for the best. And chances are you lose money when you do that, like, probably 80 or 90% of the time. You're going to lose on those calls, right? But this way we can earn a little bit of money even if we're wrong. We just got to watch out for that big dip, right? We got to make sure we don't trap ourselves in that worst case scenario. But the odds of that happening are pretty slim. But so yeah, if we look at Carnival here, I mean, we basically see, you know, long-term downtrend, and then just, you know, this waterfall fell off a cliff, right? Now, you don't want to be going and buying the stock when it looks like this, you know, right before earnings, because it could have another big leg down, right? And if this does have another big leg down, well, that trade is going to earn us a tiny little bit of money, right? Nothing, you know, no, nothing. You can't make a living off of it, but we're not going to lose anything. Now, but there is a chance here where we've got a fairly high short interest. What is this, about 15% or something, which is fairly high. And because it's moved down so much, this could move back up just as fast, right, on these earnings. And that's all we need.
Typically, how much short interest, like if you were to give it a number, like how much short interest would you want to see on a trade like this?
So on a trade like this, I'd like to see above 20%.
Okay.
You know, Rite Aid had, I think it was 26%. Carnival, I think, is Carnival was 15. Just give me a sec here. I'll just look this up. Okay, Carnival is 13% short. So it's a little light. I probably wouldn't do this trade on anything that's under 10%.
Okay.
And as we get deeper into earnings season, there'll be a lot more opportunities. So I can be more selective. I can be pickier. I can go,
Right.
you know, I can set my sort of, you know, I'm not going to take any of these trades if unless short interest is above 15% or 20 maybe, because there will probably at some point during earnings season there will probably be a couple, 2 or 3 of these a day. So, you know, we don't want to be going crazy with them.
Yeah.
We want to be selective.
Yeah.
I'm doing these ones now to kind of warm you guys up to this a little bit and do a little bit of teaching on this, so that when we get into earnings season, we can, you know, be looking for those good opportunities.
Cool. Yeah. No, thank you. And what do you think is like the batting average for a trade like this? I don't know if that's like a question that's like too difficult or.
Yeah, it's hard to say.
I know everyone's different. Yeah.
Yeah. So there should be about a 50 to 55% chance of you hanging on to that credit. So we get a tiny credit, right? We get that credit of 5, 10, 15 cents, right?
Right.
And so there should be about a 50 chance that you get to keep that credit. And then there should probably be a 10 to 15% chance that you hit the home run, that you get a payoff that is, you know, maybe 5 to 1 on your risk. And your risk being that, where is that? Your risk being this worst case scenario here, right? This dip down in your equity curve, you know, right down to here. And that on this one, now this is with 2 options, this is, you know, $278. So really on per set of options, per spread, this would be, you know, $140. This is your max risk on this trade. And you can see if this goes up to 15, for that 140 max risk, then you're collecting $700. You're making $700. That's not bad for a few weeks' work, or even it could theoretically just be a few days. But I think that in a good short squeeze, it goes on for a little while, and you want to try and stay in it. So that's why I'm choosing expirations that have about 3 weeks in them.
Okay.
Good mix of enough time to let this thing sort of do its thing and really get going,
Right.
without it costing us a whole bunch of money.
Yeah. Okay. Cool. Yeah. I mean, the first time I ever heard of this trade was when you brought up Rite Aid. So I'll definitely, you know, investigate this further.
Yeah, I think it's a better way to do it than just go and look, hey, this has short interest, you know, high short interest, it's got earnings, I'm just going to buy some options. Because if you do that, you're gonna be losing probably, you know, 85 to 90% of the time. You're going to lose 100% of your or near 100% of your what you spent on those calls, right?
Yeah.
This way, you've got a good chance of essentially breaking even, right? The 5, 10, or 20 cent credit that you receive is pennies, really, right?
Right.
It's more or less breaking even, but that's good though. I mean, you get to make this play essentially for free, and
Yeah, it's
every
always
once
good.
in a while you'll hit a home run.
Cool, I'm for it. Thanks, Kevin. Appreciate it. Appreciate the lesson.
All right, so let's go back. Where did I put that calendar? Oh, I think it's here. Yeah. Okay. So, taking next weekend or taking next week off. No ticker talk next Thursday. I will be doing the briefing video on the weekend, and I'll try and do little videos like I did, earlier this week. Quick little videos if I see something setting up nicely, and then yeah, I'll have the calendar, a new calendar out for you soon. But I think that what'll happen is, so 2 Thursdays from now, we'll do a ticker talk. And then the Thursday after that, we'll do a really in-depth session on this option strategy. So thanks for coming out, everybody. Hope you all enjoyed that. And we will see you all again soon.
Thanks, Kevin.
You're welcome.